Hello traders, welcome to FreeFX. I'm Francesco and I've been looking at the markets this week. And when I say the markets, really I mean Euro USD, because that's really all I look for. So in the FX world, we have this kind of strange situation now that we had a bit of volatility and now we're kind of stuck in this place. This is the 12-year trend that we see in Euro USD. Now we see that we've come back to the fold, so we are back into this range, and that means that was not really much else that we can add to that. So now if we change the candle view, you can see the red candle there taking us back into this channel. What's interesting about this is that we have this Fibonacci retracement level and we're kind of back below it. So again, we have another confluence of technicals there. If I wanted to be sure, I'd probably add something like an indicator, and for indicators there's plenty of choice there, but if I took something like ADX, for example, or yeah, perhaps ADX, or even perhaps we could use something like ATR. Actually will give us a true range there. So let's add a true range there, and we'll give it the usual kind of 14-day, and that's basically where we're at. You can see that declining kind of historically, the actual true range has come to rest about here, March of this year, and then it's picked up slowly. So it's not to say that it can't be any higher really, but perhaps just perhaps we might be able to see this develop a little bit slowly. Now what's interesting about this is it's monthly. If I put it down to a daily, you can see that the actual true range ATR is kind of a bit flat at the moment. We're kind of down to this 81 pips. In March, April, we went up to 159, 160, so about double. So volatility was great there for trades, and obviously we are in a bit of a pickle. So if I just kind of wanted to come out of that for a second and see a little bit further back, you can see that this peak was quite extraordinary. If you go back to 2 years ago, or even just a year ago, sort of March of the year before, it was even lower, as like in the 60s. So it's quite a difficult thing to trade in these kind of conditions. Obviously, it's an average, over 14 days, but essentially we are in a heightened state because of what happened during the pandemic and other reasons, but essentially that's where we are. And also you can look for divergence. So if I wanted to make this a little bit more obvious, I would take this and compare the two. You can see that while we've had this sort of head and shoulders, and it's kind of come to pass that it was maybe a head and shoulders, the movement in price has not really picked up in the same way here. So that's another reason to be suspicious of direction at the moment. I mean, just today I lost about 2% of my account just trying to trade Euro USD. It's really, really difficult. If you look at the actual daily, the size of that is pretty small. I mean, just having a look at that, we've had a very, very small, if I get this, we should be able to get some details here on the actual cross. Yeah, so I mean the actual size of that should come up on the thing. If it doesn't come out automatically, it's no problem. We'll just measure it ourselves. We'll take the ruler there and do that ourselves. So we can see that's pretty small. Yeah, like 50 something pips, not particularly large value there. It was a solid candle to the upside, but really kind of no progress from the previous day, and we're still kind of topped here at about 167. Yeah, sorry, 116.7. So we're under 117 anyway. So we're under 117, and there's nothing we can do about it. We just have to wait for this to resolve. And I was hoping that having broken this neckline here at 117.50 or 117.70, we could get down to business and really just have a proper move. But it hasn't really materialized, so we just have to wait on that. So I'm going to finish and say that this week we have a pretty weak start, and also we can maybe use a different indicator just to kind of have a look at that. The RSI, see what that's giving us. For example, it is giving us this on the 14-day. I usually have it at 80/20. The default is 70, but let's look at the 80 value. So we had the 80 around here in July, and we've not been above it. In fact, we had this sort of divergence as price was going up, RSI was coming down. It hasn't stopped coming down until price is conformed. So price and RSI are conforming now, but it's taken a while. It's taken about 3 months to conform. So it was a true divergence, and it's kind of actually resolved itself. So anyway, we are now into the kind of nearly 30 there. So that's kind of getting to oversold conditions. So based on that, obviously we might say, well, it's going to rise, etc. But I'm not so sure. We just have to wait and see. Now I was going to say that I'm going to take that off because I'm going to show you one more thing. I've been kind of trading on shorter term parameters as well. So the time frames I've been using, for example, would be the simple moving average, actually the exponential. And for the exponential, I was using the 20 and the 50. So I'll change that to a 20 and then also a 50. So for the 20, I have a light blue, and there's a reason for these colors because I use them on my trading platform as well. So I kind of like to have the same colors just kind of for clarity. So that's the 20 period exponential moving average, or 20-day because it's the daily chart. And we crossed it and we're still kind of below that. Now it gets interesting because we want to use the shorter term charts to see where it's at. So we'll basically use the shorter term chart and see how we go with this, and make it a bit thicker because it's quite difficult to see. There we go. So we've basically been below it for a few hours, a few days actually, and it kind of crossed over it just about, this morning, and we kind of been above it. So you could say it's a buy signal, but I did a buy and then it sort of crashed kind of down, and it was a bit I was a bit unsure that this was actually working. Check the 4 hour and compare, because it's always good to compare. Now if you check the 4 hour, we're actually edging above it, but we've had 2 candles kind of below it. So, and we've had 1, 2, 3 touches and possibly break above it, but it's not confirmed. So the 5 minute, because it's always good to have a look at the very short term just to see how price is moving that way. The 5 minute is this, kind of messy today. So we've been above it and then below it and then above it. But if you see something on the 5 minute that's so uncertain, obviously that's reflected in the hourly. As they say, price is a fractal. So above, below, above, and possibly below again. I mean, that's not real progress. It's actually lower than it was here. And all of this is the same level, 116.75, let's say. 4 hours, we said, I'll show it again. There we go. We're kind of below, just edging higher, but not really. And then with the daily, as I said, we've been kind of below that. So it's really been not so much a sign of bullish. Now we can add the 50, obviously, which would give us a different signal, but that would be even slower responding. So it's not going to really resolve this. So that's basically where we're at. We've got all these different things, and if we wanted to add one more indicator just to really give a multilateral approach to this, is advance and decline. So market direction, and let's just call it ADX. Okay, ADX. Average. There we go. Okay, there's the ADX direction indicator. I think that's the buy and that's the sell. So short increasing and the buy decreasing, and there's the crossover that kind of crosses the two. It's not quite what I wanted, but this is a useful one as well. So I'm just going to delete that and add something else, which is the ADX, advance decline ratio. Actually, that's the one I want. There we go. Okay, so this is not giving us the direction; it's just telling us the strength of the direction, so the momentum, if you like. Here there was obviously a bullish momentum, and then the bullish momentum declined, and whatever came after it was by all accounts, this is a mess. I mean, it's like a triple top or a head and shoulders, but lots of indecision while direction was being formed. And then we've had this sort of down move from 118.50 down to these sort of 116.50. So 200 pips, wouldn't spit on that, but essentially it's only just started to pick up. It's kind of declined. We've seen the average true range kind of flagging and not really moving. So we're starting to pick up a little bit. So this could be a sign that there's some kind of pickup in momentum in some direction. I'm not sure which direction yet, but it could be that there's resistance here at this level. So the next thing that we can look at is the options. And I've done this before, and I'm going to show you again, because the last time I looked, there was a lot of selling at 117, and that actually came to pass, as I said in a previous video, and really has been the case. But how much traction? So the next lot of sell was going to be at 116. How much traction that will have, it really depends. So if we just have a look at the products here, look at foreign exchange on the CME website and go for the Euro USD. So we can now see what the different strike prices give us. The 117 is still the highest number of contracts overall. All of these, you can see it's the strongest at 4,729. And then at 116, you've got basically the second strongest at over 3,000 contracts. And then the next ones really are further up. You've got 118 as, again, puts, so sell at 2,925, and then the next really big buy is 118.50 and then 119. So at the moment, basically, we've got the kind of hedging through options is telling us that there's hedging for a short selling down at the 117, which we're actually below, and down at 116, which we haven't got to yet. So imagine like a magnet pulling prices down at 116, and then that's not how options work. I mean, they're not actually determining price, but just saying that they're telling us about expectation in the market. So that's one thing, and the other thing obviously is the actual buy at 117. So having had these two, sorry, not 117, 119. So having had these sort of two magnets at 300 pips, and we are kind of at the 117 or 116.70, we're not really in any situation given any sort of certainty about this. So if I looked at the CME futures, for example, for euro, you'll see what I mean when I'm talking about the sense of directionless euro. That's the actual there we go. Let's take December ones. All right, so there's your daily. These are the bars. I'll go to candles, and you'll be able to see quite clearly what the volume situation is. Let's have a look at volume. Okay, there's your volume there. I'm going to take this down so we can see the volume. Now, that's the daily chart. So you can see for the current contracts expiring in December that we've had selling for 3 straight days, and the price kind of reflected that. Volume was declining. So subsequent days, so Monday and then Friday, Thursday last week, have really been inconclusive. There's been declining volume overall, selling and buying. It's been declining, so that's meant we're basically stalled. There's nothing really happening in that sense. And if you look at this massive candle on the 10th of September, I mean, that was really quite incredible. And yet, it didn't really lead to anything. It went from 118.20, this is futures price, not spot, but 118.20 to about 119.20, so about 100 pips, and then retreated all the way back down to here, 118.40. So this wick here, and then not much progress, and then declined on big sell volume, fair to say. Now let's look at the hourly, because I just want to see what happened on a sort of micro level. That's kind of today. So again, very small movements, and we've not had a lot of progress. We can see that I'm just making them bigger, so they look bigger, but they're not really. That's 116.60, and that's 169, so about 30 pips there. So kind of large enough sell volumes, but not really much progress. So again, it all points at the same picture. We've had the sort of start of volatility at the start of autumn. So, start of last week was great. I was getting really excited. And now we're sort of stuck in a situation. And that's what happens. Flat markets can't force your trades. So as I said, I lost about 2% on my account today. Decided to leave it for the day. And I'm going to basically put a stop of 2% risk per day on my trading, so that if I don't get any joy with the trading ideas that I have, it means that probably, if it's not happening on the long side or a short side, probably means time to pack it in for the day and just leave it at that, because you don't want to keep losing money hoping for a bigger win. Then you want to sort of have to bet bigger or wait days to kind of make that money back. I've done all that, but it kind of affects your equity curve a little bit, so rather not. So that is all for the day, waiting for the rest of the week to develop and hopefully some more opportunities happening. Let me know your thoughts, subscribe, comment. Great to see you later. Ciao.